Hi dears, so welcome back. We're going to do a very important question which is prior to the exam. It is very important and this of one type only we are going to do but which you have to remember. So let's see that, okay. So this is a very interesting question. So the books of Rajendra showed the following information. There are two columns given 31 12 18 and 31 12 19, meaning to say 31 12 18 would be the opening values and 31 12 19 would be the closing values. Cash in hand and at bank 1700, 9975 is the closing. Stock 10,000 opening, 12,500 closing. Trade debtors, nothing but sundry debtors. Question mark is put, which is nothing but you have to understand it's a missing figure. Okay. And if it is given nil or if it is put hyphen, that means it is nil, 0. Okay. But if it is put question mark, then we have to understand it's a missing figure which we need to find. The 17,500 is a closing, but opening is question mark. Trade debtors, that is sundry creditors, trade creditors, that is also question mark, opening, missing figure which we need to find, and 9,250 is the closing. Sundry assets 1,500 for both opening and closing is the same. Cash books provide the following, meaning to say we have to prepare the cash book based on the cash transactions. Receipts from debtors rupees 68,000, private dividends paid rupees 1,000. My dear friends, you must be aware of this particular statement. Private dividend paid, dividend which is paid, we are paying the dividend based on the capital, isn't it? So private dividend paid in rupees 1,000, meaning to say it's the additional capital. So please remember that it is the additional capital. Okay. Then indirect expenses rupees 9,825, drawings 2,300, payment to trade creditors 56,000. Then we have discounts allowed by them. Discounts allowed by them. By them is discount received. Discount allowed to them is discount. But here discount allowed by them is given, meaning to say it is rupees 600, which is nothing but discount received. Then we have further other additional adjustments given. Cost of goods sold during the year is 52,650. Sales is not given. Normally in the question sales is given, but here in this question sales are not given. Here cost of goods sold is given 52,650. He maintains a steady gross profit of 25% on sales. So you know that we have already taken that calculation, 25% on sales. That means we have to take what 25% on sales is nothing but we have to take 25 by 100 on sales. So here since the sales value is not given, we have and only the cost on goods sold or cost is given, we have to convert that 25% on sales into 25% on cost. Okay. So how do we do? We have a formula for that also. Okay. So take that. Then next is bad debts written off during the period was 200 rupees. So we one treatment is we show it on the we show it in the this one, that is in the sundry debtors we show it, right. So bad debts written off, right. Then next is about the past bad debts that is written off, recovered rupees 100, already written off but recovered rupees 100. That means it is an income, so it has to be shown in the cash. It's in the form of cash, so it should be shown in the cash book receipt side, as well as it should be shown on the that is we have to show it in the profit and loss credit side. So please remember that. Now based on this information, we have to prepare the trading profit and loss account and the balance sheet for that particular date as on 31/12/19. Okay, so this question to start with, we have different steps to value, because since as per this question, if you see, we don't have directly the gross profit given, or we don't have sales given, we don't have purchases given, we don't have opening value of the debtors and the creditors given. So in such a question, we are in a dilemma of how to proceed. So first of all, we need to find, so first thing is we need to find sales. For finding the sales, what you have to do, we have a hint given in the question. And what is the hint given? Cost of goods sold is given. So cost of goods sold, we know the formula is sales minus gross profit. And first of all, the sales we don't know. So cost of goods sold we know, but we don't know the gross profit. If we know the gross profit, we can easily calculate sales. But here gross profit is not given, but there is a hint again. hint in a hint, we can say that is gross profit is 25% on sales, which is nothing but we have to convert that sales into 25% on that is 25% on sales should be converted into cost, isn't it? So when we are converting sales into cost, we already know that the denominator we have to deduct with that particular percentage. When we are converting cost into sales, we add with the denominator that particular percentage, but when we are converting the sales into cost, we deduct in the denominator with that particular percentage. So 25 by 100 minus 25, that is 25 by 75, 1/3 of the cost, that is cost of goods sold we have is 52,650. Of that, 1 by 3 will be getting the amount, that will be the gross profit. Now we already got when we get the cost of goods sold, we already know in the question. Gross profit also we calculated. From that we can calculate the sales, because the missing figure in cost of goods sold is equal to sales minus gross profit, which is nothing but sales is equal to cost of goods sold plus gross profit. So you will be getting the total sales. And from the cash book, when you find we already have the cash items. Now when we prepare the cash book, we get the minimum remaining balance, that might be cash sales. Total sales we know, cash sales we know. From that we have to find the credit sales. Then next is we have to prepare total debtors. In total debtors account, when we prepare, normally we find the remaining balance as credit sales, but in this question we already found in some way the credit sales, but we don't know the opening value. So when you substitute the remaining balance, we can find easily that is the opening value of the sundry debtors. Similarly, we have to find for the that is purchases. Now how to find purchases? We know that cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock, but we don't have direct expenses anything given here, only indirect is here. So that's not an item coming in the trading, leave it out. So opening stock plus purchases plus direct is 0 minus closing stock. Opening stock we have 10,000, purchases we don't know, so it is a missing figure. That is then minus closing stock, we have the closing stock also given 12,500. So all the three items are known, that is cost of goods sold. So what is it? Purchases is equal to, we have to just take the vice versa. So cost of goods sold, that is plus closing stock, okay. Then finally you will be getting the minus opening stock, you will be getting the value, that will be the total purchases. But here nothing is mentioned about the cash purchases, isn't it? So assume that cash purchase is nil. Since the cash purchase is not given, assume that the total purchase is assumed to be the credit purchases only. Then with this value we will be preparing the trading, and then gross profit we find, then we get the net profit, then we prepare the balance sheet. Are you ready? So let's move. Okay, so what to do with? The first thing we have to do is that we have to start preparing. So first is, let's start. So the step number 1 is that is calculation of sales. So calculation of sales, we already know that gross profit is equal to 25% on sales, which is nothing but, that is we have to now converting it into cost. So 25 by 100 minus 25 is equal to 25 by, that is 75, that is 1 by 3 on cost. Now what is cost of goods sold? We already know it is rupees, that is 52,650. Okay, now gross profit will be 1/3 of cost, that is 52,650, which is nothing but 17,550. This is the amount. Clear? Now we know what is gross profit, we know what is cost of goods sold too. So from this we can find sales is equal to gross profit plus cost of goods sold. Yes, this from the formula, cost of goods sold is equal to sales minus gross profit, isn't it? Yeah. So just substitute the value 17,550 plus 52,650. So what is the answer you get? You get the answer rupees 70,200. This is the sales. This is the total sales. Please understand that way. Yeah. Now we have to see the totals. Cash sales or credit sales we have to find out, isn't it? So let's go with step number 2. Step number 2 is now calculation of purchases. We will prepare that also. Calculation of purchases. How to calculate purchases? We already know cost of goods sold is equal to opening stock. So we are using the two formulas of the cost of goods sold here, plus purchases plus direct expenses minus closing stock. Now opening stock we know that is 10,000 plus purchases we don't know, plus direct expenses is 0, not given in the question, minus 12,500 is the closing stock. But we know that cost of goods already given 52,650. From this you can find that the purchases remaining figure would be 52,650 plus 2,500, which is nothing but the answer is rupees 55,150. So nothing is mentioned in the question about cash purchases. So just assume that this will be the total purchases, will be same as the credit purchases too. Okay. Now what is step number 3? Step number 3 is preparation of cash book. So let us prepare the cash book. Now let's divide it. So debtor item, creditor item, receipts, rupees, payments, rupees. So what are the items? Let us see that. So one by one. The first thing is that we have to write the opening value. So 2 balance brought down. And what is the value given in the question? 1,700. Then 2 sundry debtors. That is nothing but it is a cash that is received or receipts, isn't it, from the debtors. So 68,000. Write that. Then you have a private dividend, which is nothing but the additional capital, isn't it? So 1,000 rupees. Then what else? We have bad debts recovered, is written off already and then recovered, isn't it? So it is 100 rupees given. That is the receipt item. So we have to write here. Then 2 sales we don't know. So that will be the balancing figure. We can understand because we have already got total sales. Now based on this, if we get this only, we can prepare total credit debtors item, isn't it? Okay. By cash paid to creditors. So by sundry creditors, how much? 56,000. Then by that is we have indirect expenses. Indirect expenses already given in the question, 9825. By drawings, it is 2,300. Then we have the closing value by balance carried down, that is 9,975. Now let's total it up. So how much is the balance total? It is coming 78,100. Here also 78,100. The balancing figure, it is called to be 7,300, which is called credits. This is called the cash sales. So this is cash sales. Okay. Now, so from this we can do one thing. We already know what is the total sales. Now we know the cash sales. So let's prepare the credit sales. So let's prepare that. So we know that, what is it? Total sales is equal to cash sales plus credit sales. So from this we can understand that, what is it? Credit sales we need is equal to 70,200, which is the total sales, minus 7,300, which we got just now, cash sales. We get balancing figure rupees 62,900. Very important question. Okay. Yes. So this is done. Now what is the step number 4? What is step number 4? We have to prepare what? We have to prepare the so we have to prepare the opening balance of debtors. So for that, what you have to do? We need to prepare debtors account, isn't it? Yes. So write down ascertainment of opening debtors. So what you have to do now? We have to prepare the 2 columns here. So particulars rupees, debtor and creditor item, isn't it? Yes. Now to balance brought down, as per the format we write it, we don't know the value of that. Let us find that's the balancing figure. Obviously we know that is the balancing figure. Then we have 2 credit sales, which we already found this below here. So 62,900. Just substitute it. Then we have cash by cash account, that is nothing but cash received, that is 68,000 given in the question. Then we have discount allowed is not there, just ignore. Bad debts is there, so just write it here. By the bad debts, it is nothing but 200 rupees, which is given in the question. Then we have by balance carried down. We don't have any other item, so this closing value, and how much it is? It is 17,500 given in the question. Okay, just total it up. Now how much is the total we get? 85,700. Now just find the remaining balance will be called the opening balance, isn't it? That is nothing but 22,800. So this is the opening value. Similarly, we have to find the ascertainment of the opening creditors. Let's find that. Ascertainment of opening creditors. Now, so let's prepare it. Yeah. So debtor and creditor. So we have to write particulars, rupees, particulars, rupees. So write starting by balance brought down, the opening value. In that we have, we don't know that, so it's a balancing figure. Obviously we know it. Then by credit purchases, we already found it, because here the total purchase and credit purchase both are same, and we got it 55,150. Okay, let's write that. Now come to debit side. We have two cash paid, cash account, which is cash paid. So to cash account, how much it is given in the question? 56,000. Then what else? We have two, that is what is it? To discount, that is received. Okay, that is nothing but 600. Then to balance carried down, how much it is? 9,250. Already given the question. Just total it up. So we get 65,850. Clear? Good. Here also let's substitute 65,850. Now what is the balancing figure? That is called to be the, what is it? Opening value of the sundry creditors. 10,700 is the value. 10,700, isn't it? Yes. Okay. So this is done. Now what is the next step? You have to prepare the opening capital. So step number 6, that is calculation of opening capital. And how it is? That is, we prepare opening statement of affairs. Opening statement of affairs as on what? 31, what is it? 31/12/18. So just write that. Now, so we have to write liabilities, rupees, then assets, rupees. So just write the details. Then what else? So let's start with the liabilities. We have creditors, opening value 10,700, which we have already found here, isn't it? Normally what we do, we prepare the opening capital in the beginning, but we can't do that for this question. Why? Because opening values are not found. It's a missing figure. That's why. Okay. Yeah. Then we have capital. We don't know that. So it's a balancing figure. Well, that's why we are finding this. Okay. Then we have cash in hand and at bank. That's given in the question, isn't it? Opening, how much? 1,700. Then what else? We have debtors, which we found just now, that is 22,800. Then what else? We have opening stock, that is given 10,000. Then what else? We have sundry assets, that's a different thing, item to be here. So that is 1,500. So we have found all these things. Now let's total it up. So when you total it up, you get 36,000, isn't it? So the balancing figure would be called what? Capital, that's balancing figure. Okay, so here 25,300. This is the remaining balance. Okay, this is the opening capital. Step number 7. What is step number 7? Yeah, so step number 7 is preparation of the what? The trading profit and loss account. Yes, so preparation of the trading profit. So we have to write trading and P&L account of Mr. Rajendra for the year ended what? 31/12/19. Yeah, so let's write, prepare the columns, debtor, creditor and so on, particulars, rupees, particulars, rupees. Okay, so let's enter the details now. So what is it? Yeah, so first of all, to opening stock. So to opening stock 10,000, which you already found. Then to purchases, and this purchases is credit, we already know it, the same. So 55 150, which you already got. What else? Then by sales. Now we have to write cash and credit separately. So cash is how much? We found it. It's 7,300. And credit is how much? 62,900, which you already found. Total is 70,200. Very good. By closing stock. How much it is? 12,500. Total it up. It is 82,700. Good. Now, what is here? 82,700. So, what is the remaining balance called? It is the gross profit. So, to gross profit carry down, isn't it? Yeah, very good. Now, so what is it? 17,550. That is the, because we already got it, isn't it? We have already found it. So, based on that only, we are doing that also. So, now this, see, actually, my dear friends, this is just a verification also, one way. Now, this balance you are getting 17,550. This should match with the already we found the gross profit, isn't it? So, we are not already substituting it here, but we are just verifying. This one way of trial and error method too. Okay, that's all. This should match with the other one. Then your answer is going to be correct. That's it. Okay, so let's continue. Let's prepare the profit and loss account. Continue with it. So, by gross profit brought down. How much it is? 17,550. Okay. Then what else? We have some credit items. By bad debts recovered. How much it is? 100 bucks. Yes. Then by discount received. How much it is? 600. Write that. Okay. So that is done those side. Now what else? Let's come to this. We have indirect expenses given. Write that. 9825. Then to bad debts, that is 200 rupees. Then, so we don't have any other items, so write to net profit carry down. This being transferred to the liability side is being added added to the to the opening capital, isn't it? So let us see the total. How much? 18,250. Here also 18,250. The remaining balance is called, that is the net profit, and how much it is? 8,225. Yeah. Okay, now let's prepare the balance sheet. So let's prepare step number 8. So that is balance sheet of Mr. Rajendra as on 31/12/19. Okay, so let's prepare it. Yes. Now liabilities, rupees, assets, rupees. Done. So write the liabilities items. So first is creditors. Creditors is already given, the closing value 9250. Then we have capital. You have to be very careful while entering the details. Capital we already found, it's 25,000. That is which is nothing but 25,300. That is the opening value, we found it, isn't it? Yes. Then what else? Plus we have the private dividend, that is nothing but additional capital, isn't it? Yes. And how much it is? 1,000 rupees. Add it. Then what else? Plus we have to add the net profit, and how much it is? It is 8,225, which you already got. So what do you get the total? It is 34,525, isn't it? Yes. Then minus drawings. So drawings, how much already given the question? 2,300. So what is the value? 32,225, isn't it? 32 225. Good. Okay, now let's see this side, cash in hand and at bank. Okay, cash in hand and at bank, it's already given in the question, 9,975. Then we have debtors, we don't have any other, and here bad debts are all already we have tallied, so that's why we are not going to deduct it over here, neither we are going to add the bad debts recovered, so don't get confused about that. 17,500 as the value we have given the question. Stock 12,500 given the question. Then sundry assets 1,500. Now let's total it up. So as we total, we are getting here this side, liability side, we get 41,475. Let us see here, it is also here 41,475. So this is the total. Thank you.